Elon Musk dropped big news today for Tesla stock investors, yet the stock actually sold off. What is going on? I think this should be clarified for anyone that is confused, because some parts of the markets are doing very well today, while others not so much. Example being the RSP is up almost 1%. And the S&P is down 0.25%. If you take a look at the headline markets, the Russell 2000 is up almost 2%, and the S&P and the Nasdaq are struggling to stay in the green today. This is a large divergence, and we'll talk about it. Now, there's two things notable in terms of Tesla news today. First and foremost, Tesla has posted a job posting for the robotaxi teleoperation. It actually says here, C++ software engineer, teleoperation, Tesla bot, and robotaxis. So a position that is going to be pretty flexible and versatile, with whoever takes this full-time job is going to have many different things that they can work on. There's also a lot of speculation that FSD v13 will be dropping or be able to be downloaded or updated, if you will, on Thanksgiving. So that is to be continued. Now, really, the big news today was Elon Musk that said V13 is trending to be 500 times or percent, not times, percent better than the current version of FSD that we have. That is no small increase. That is massive on a software that's already pretty good. So if that's the kind of improvement that we could see in the near-term future, you're going to be looking at a rollout of robotaxi probably faster than we're even expecting now. Now, we do have other news that we will get to in just a moment, but first I want to explain why markets are actually selling off today in certain areas, like Nvidia that's down 3%, Apple that's struggling to stay positive, as well as some of your other big tech names that are just not doing that great, especially relative to the Russell. And it comes down to President-elect Trump's secretary appointee. He chose a hedge fund executive named Scott Bessent for Treasury Secretary. Now, Scott Bessent believes that we can get GDP to about 3% on an annualized basis, while also bringing down the deficit from around 7% today down to about 3%. So still, we're going to be losing money, right? Still going to have a deficit, but not as much as we currently have. It's the first remnants of fiscal responsibility that we have heard in a very long time. Now, as you guys probably already know, if you don't, you're about to learn this. Inflation is only government spending. Now, longer term, right? Obviously, you have supply issues, but in a capitalistic market, when you have a supply shock like we had with COVID and everything kind of got bottled up and some areas of the supply chain just stopped working correctly, outside of that, in any normal economy, what happens when you have supply issues, like let's say lithium for an example, when lithium was really expensive, okay, people just started producing more lithium. The market makes up the imbalance or oversupply or undersupply, if you will, to keep it simple, and they start producing more, or they produce less as demand fluctuates. So in a normal economy, you don't get these big supply shocks too often. So minus a supply shock, the only thing that really creates inflation is government spending. And really, it's deficit spending. We are spending right now as if we are in a recession on a deficit spending like basis. We have a deficit like we had during World War II, okay, when global economies were not in a good place. Okay, so if we bring that down, if we're less, stimulative, less spending, if you will, then that's going to be good for the inflation aspect of our economy, which is going to be really good for small caps, not as good for big tech. Big tech has really been seen as this safety trade in our markets in case inflation surges or we have a recession or something along those lines. You would probably rather be in big tech over your, other areas like small caps. Now, with, Steve Bassinet, if we have a lower deficit, stronger growth, lower inflation, you would want to be in small caps. And that is really the move that you're seeing today in markets. Now, that leads to some underperformance from some stocks that have done well in recent weeks. Netflix down 3%, Nvidia down 3%, Meta's break even, Google's up a little bit, Microsoft's down a little bit, Apple's up a little bit, but it's really not that outperformance that you're seeing in small caps. Now, specifically with Tesla, I do think this is the wrong move. So I think ultimately Tesla's going to reverse this. Not concerned at all. Tesla should trade more like a small cap company because it's so interest rate sensitive. You can see TLT today is up 2.35%. This is no small move for TLT. So 10-year treasury yields are dropping about 13 basis points today. And that's really the, reason why small caps are outperforming besides everything else that I just mentioned. Okay, 10-year treasury yields coming down is really good for small caps. And some of that attention capital is starting to be redeployed into those small cap areas. Thus, I think Tesla should be doing well today. It's not. I do think if this is a new trend of 10-year treasury yields falling, that's going to be really good for Tesla. Over time, on a day-to-day basis, Tesla can fall, but this actually makes me more bullish on Tesla throughout the rest of this week because I just don't agree with the move we're seeing in Tesla stock. We don't have any news to justify this. It's simply just, my opinion, algorithms that are, pushing Tesla slightly lower today. It's not like Tesla's crashing or anything. Tesla's down about 0.67% at the time of recording this video. Like, it's not a terrible day, but I think Tesla should be up 3 to 5% today. That makes sense given what we are seeing with treasury yields. Option activity in Tesla today remains very bullish. You have 188 different trades totaling $140 million. Get this, with a positive order value of 86%. This is a little bit more confirmation on my thesis here that Tesla should probably be doing well today. There is a strong case to be had that Tesla's down day, slight down day today, doesn't make sense. Even option activity is supportive of that, with people positioning for an upside move for Tesla. Options are always forward-looking, right? The markets are always forward-looking. So the option activity we are seeing today is implying via 86% positive order value that we will see an upwards move over the next couple of weeks. A lot of option activity in the 340 to 420 level by December 27th. So there's still a lot of options positioning for new all-time highs in Tesla in the not so distant future. With that said, today you have short interest of free flow at 2.79%. $27.51 billion sold short in Tesla, totaling 78.02 million shares. And check this out. I always like to see short sellers covering on a red day. Why? Because if you're a short seller and the trade is working for you on any given day, that is usually a moment where short sellers don't cover, right? Short sellers don't like to cover on days that they're actually making money on their short position, as long as they're still bearish on the stock. Now, if you have recently turned bullish on Tesla and perhaps you were bearish on Tesla before, then it's prudent to cover on those red days. And that's what you're seeing today. You have 2.4 million shares that are apparently being covered on. That's the highest number I have seen since the election, at least. That's a really good sign that this is not going to be some prolonged down move correction for Tesla. I think that gives me even more confidence, added with the option activity that we're seeing, that we will actually see an upside move for Tesla. It wouldn't surprise me if that is this week. As I said in the videos over this weekend, that I was expecting Tesla stock could even be a $400 stock by the end of this week, following the Treasury Secretary pick from Trump. With that said, before we get into any of your other data today for Tesla, I do want to take a look at some of your other news that could be affecting Tesla as well. The Cybertruck was spotted in the Montreal Santa Claus parade yesterday. Tesla China has introduced a 10,000 yuan, a $1,380 US discount for the Model Y. This discount can be combined with the 60-month 0% APR promotion. Tesla has launched a new Lease My Tesla program to get more EVs onto Australian roads. Tesla says, quote, "This initiative makes Tesla vehicles more accessible and affordable for Australian drivers." Volkswagen is set to lose $1.6 billion after EV battery maker Northvolt filed for bankruptcy in the US. Northvolt is one of the largest tech failures ever and could lose more than $13 billion of investors' money. According to a new report from the EPA, Tesla sold nearly 34 million metric tons of greenhouse gas credits in 2023, the most of any automaker, whereas GM purchased approximately 44 million credits in 2023 to offset its deficit. California could offer state tax rebates for electric vehicle purchases if the incoming Trump administration eliminates the federal EV tax credit, said Governor Gavin Newsom today. Tesla's Bitcoin holdings are now worth an estimated $1.1 billion after the recent bull run, up from $450 million earlier this year. Sentiment for Tesla stock today over on StockTwits is actually pretty damn bullish. You have a sentiment score of 68, which is firmly in bullish, a bullish zone. Yesterday it was neutral at 48. Message volume today is higher than yesterday. Yesterday you were at 35, which was low. Today you're still low, but you're at 43, so that's good. And the participation ratio is ticking upwards from 55 to 56. Another reason why I think you could see a move higher this week for Tesla. Keep in mind that you do have markets that are closed on Thursday and only a half day on Friday, so that'll make things a little bit weirder. And you know what they say, right? Bull markets are born on pessimism. They mature on skepticism. And they die on euphoria. On a single stock basis, I think that's pretty true as well. Take a listen to this headline. Tesla stock surge is being driven by animal spirits, says UBS. They say Donald Trump's election win is set to bring policy changes, but not all may be beneficial to Elon Musk's EV company. I think it's safe to say they are completely missing the ball. At the same time, UBS analyst Joseph Spack has raised his Tesla price target to $226 from $197 per share while maintaining a sell rating. I mean, I guess they're missing FSD, they're missing the long-term potential of robotaxis and optimists, as well as Elon's guidance for 20 to 30% delivery growth next year, presumably with higher margins if 10-year treasury yields do come down. And as I think inflation surprises to the downside, maybe they live in their own world. Maybe they're just not as smart as you. Maybe they're a little uneducated or naive for whatever reason or another. I think that's actually good news for Tesla. You need some skeptics out there to keep the party going. Here on the date today, you had the October Chicago Fed National Activity Index that came in at negative 0.4 versus an estimate of negative 0.2 and negative 0.27 in the prior month. This is the worst read since this past January, with breadth quite weak. 55 out of 85 individual indicators made negative contributions. You can see this is the fifth straight month in a row of negative numbers for the Chicago Fed National Activity Index. And presumably, this is also helping to give 10-year Treasury prices a bit of a boost higher and to help bring yields lower, because this is not the hottest data. This kind of supports the Fed should be cutting rates December 18th. Now, on that note, the odds of a rate cut on December 18th are exactly 50-50. 50% chance of a cut, 50% chance of a hold. Now, I think Google Trends data is something we want to be watching as well pretty closely for Tesla, especially the United States, because if Tesla is going to have a good quarter for deliveries, you're going to see that represented in US Google Trends data, because the US has really been the weak area for Tesla in the past couple of quarters. And you do see a strong level of search trend activity. Numbers really unchanged. The Model Y at 29, the Model 3 at 23, the Model S at 10, the Model X at 8. The Cybertruck, though, ramping from 34 to 39. So overall, solid numbers there. If we look at this on a worldwide basis, now Google is not in certain countries, you do see an overall uptrend. CNN's Fear and Greed Index today is at 62, which is in greed territory. It's not super greedy. It's not even halfway yet, but it's in greed territory about 30% of the way. You do have market momentum in extreme greed, stock price strength, fear, stock price breadth, fear, put and call options, extreme greed. Market volatility is neutral, safe haven demand is greed, and junk bond demand in extreme greed. The percent of stocks trading above their 50-day moving average today, an indicator of internal strength or weakness in markets, is actually going up again for the third straight day in a row. You have about 4% of all stocks today breaking above their 50-day moving average. You now have 66.12% of all stocks breaking above that 50-day moving average. This just means if you're a stock picker, your portfolio has likely loved the last couple of days. Let me know down below in the comment section if that is true. Now, the recent AI investor sentiment survey shows that bullish investors actually fell from 49.8% to 41.3%. I think that kind of gives us more room to rally. Neutral investors rose from 21.8% to 25.5%, and bearish investors rose as well from 28.3% to 33.2%, which is actually about 2.2% higher than the historical average for the percentage of investors that are bearish. So you actually have more bears right now than you historically on any given time have. So I think that's another indication that markets are probably not too overextended like some on Wall Street are saying right now. In the next video, we will go over everything you do need to know heading into tomorrow, what the now technical setup looks like for Tesla stock. So stay tuned to the channel for that, coming out at 8 p.m. Eastern Standard Time tonight. With that said, ladies and gentlemen, enjoy the rest of your day, and I will see you in the next one.